There's been a rise in the popularity of crypto as an asset class amongst investors. Currency Hub is a regulated investment manager that specializes in digital asset arbitrage, positioned where digital asset pioneers and traditional asset management meet. It has a focus on an arbitrage strategy that makes a profit from price inefficiencies between digital assets and foreign exchange due to South Africa's exchange controls. And co founder and CEO Andrew Ludwig spent most of his entrepreneurial career managing alternative investment strategies in this space. He joins us now. Thanks so much, Andrew, for your time today. So I'm going to launch straight into things. Right at the top, what is cryptocurrency arbitrage and why does it exist?
Thank you, Alishia. I think you've really given a wonderful definition of it. But yeah, essentially, we're trading Forex and crypto through inefficient capital markets. Let's go back to what is arbitrage. Arbitrage is essentially the inefficiencies in time, data, and jurisdiction, just as three metrics per se, and has existed in millennia. And we exploit the inefficiencies as information data transfers through these particular places. So as you alluded to, we in South Africa have exchange control, and this has its benefits. It benefits me and you because we benefit from paying a premium for crypto assets in South Africa, which generate a premium from this arbitrage strategy. So if I was to purchase $100 worth of Bitcoin in New York right now, I can simultaneously sell it for a profit. And those profits have varied over 7 years. Today, the profit is around 3%. We call that the premium. And for example, if I was to use your foreign investment allowance, now referred to as AIT, that allowance of 10 million Rand plus the 1 million single discretionary allowance would allow us to trade 11 million Rand each year between January and December. And if the premium's trending 3%, there would be a gross profit of around 300,000 Rand, which we would share with the bank, ourselves, the Forex intermediary, and of course our clients. And in that instance, our clients, if I look at year to date where this premium has been trending at around 2.5, our clients are walking out with around 120 to 150,000 Rand. And I've seen some client statements this year boasting above 200,000 Rand, which we're very grateful and delighted for.
Absolutely, like you say, you've laid out there the clear incentive that this puts on the table for investors out there. But this year has seen the arbitrage premium, as you call it, spike a couple of times on account of a drop in trading volumes, Andrew. So when South Africa was grey listed and Kraken stopped accepting deposits from South Africa, but even before that, when Circle, another issuer, stopped accepting payments from South Africa in anticipation of tougher regulations. So why was Currency Hub unaffected by all of this? As a local crypto arbitrage provider, how have you ensured continuity of trading on your side?
Yeah, well, thank you for that opportunity. We were unaffected throughout all of those events that you described. And yes, the premium spikes when there's less congestion on the trade as such. So Circle shutting off, Kraken shutting off, reasons of grey listing and other, we saw the premium spiking above 4%. So we've seen regular premiums above 3% and most recently. So this is largely down to what is inevitable regulation. So as of the 1st of December this year, crypto assets will be regulated by the FSCA under a CASP license, CASP, Crypto Asset Service Provider. And the regulators worked very hard in this regard. And we preempted this. We became the most regulated crypto service provider back in 2019, notwithstanding our hedge fund backgrounds that allowed us to become financial services provider well before and build on those licenses and build on that experience. So the category 2 discretionary asset management license that we hold enables us to book your arbitrage in a discretionary manner while we are actively trading Forex and crypto inefficiencies. So if you don't have that license, a category 2, for example, to trade the arbitrage on the 1st of December, you will no longer be able to do this, according to the FSCA. We would expect the premium to increase in this regard. And we welcome the regulation. It's long overdue, and I think we'll have a wonderful impetus on the availability to digital assets and certainly to the retail market, financial advisors, institutions, etc.
Having said all of that, Andrew, some have still asked, is there a risk of the market disappearing altogether? What impact do you see all this changing financial services licenses and regulations having on the South African crypto arbitrage market? I mean, like I say, with some international exchanges now not accepting deposits from South Africans.
Yeah, it's something we mull over internally and regularly. So I think, going back to the earlier point, how did we avoid these events that halted markets as such? So we've been doing this since 2017. We have built a business with an institutional mindset. That is our hedge fund background. And in doing so, the suppliers and counterparties that we associate with are best of breed, and we deal with them on a daily basis. And we have navigated the likes of a Terra Luna, FTX, run on the banks. All of that happened in the last 18 months, unaffected. And our counterparties have been unaffected. So where they have been, we've understood where they are, but no one has been at risk. And as a result, we've never incurred a loss in our trading strategy. And we trade 97% of the time. We trade every day, sometimes twice a day. And that is by virtue of having these licenses and having the foreign exchange in-house itself. Now, what does it look like? What is the ARB killer? I'm not entirely certain what this is, because for as long as there's exchange control, I believe there will be a premium. The premium will get reduced. So when we started this in 2017 and recognizing David and Ashton as identifying this arbitrage back then, we saw spikes of like 30% premium. When we went retail in 2019, it was trending at 8%. And the media got hold of this. More providers came online, and they squashed it down to 5%. And they squashed it down to 2.5% about 2.5 years ago. And then we saw big names exit the space because they couldn't generate profits below 2.5. And then when it went down to 1.5, that's when we saw most people leaving. They couldn't generate a margin at 1.5 gross. And we could. Our clients were still coming out with around 80 basis points, 1%. That's 80 to 100,000 Rand profit. Not bad for 3 hours work if you consider this is essentially data entry, uploading your FICA and KYC documents. So what will kill the ARB? I think more people doing the trade. If a big institution is suddenly regulated and allowed to do this and can start purchasing crypto assets offshore, it'll disappear overnight. So we don't entirely know what regulation looks like. We know what the FSCA is proposing, but understanding whether cryptos are securities or assets or what is actual definitions in that regard, we're waiting for more detail and many other authorities that need to chime in.
Is that the only risk that you've got in mind right now, or does this entire scenario present, any inherent risk that you are keeping back of mind where there could be a repeat of, that kind of action that was taken earlier this year by the issuers that you do use as they clamp down? Because, these halts come without warning, right? And they pretty much catch you off guard as an arbitrage provider.
So I think in this particular game, we need to acknowledge that we are pioneers in a very new frontier, and you can act like cowboys or we can act like sheriffs. We would like to think we act like the latter, in as much that we are regulated, and we need to acknowledge that our business is held together through the continuum of being able to trade every day, and our clients expect this of us. So we have multiple channels and have accommodated multiple redundancy scenarios. So we trade on exchange and we trade through OTC, over the counter, where we have the luxury of using multiple exchanges and multiple OTC providers on the onshore side and the local side. And we don't favor one over the other. We have to remain agnostic. And as and when we need to pivot, we do. Obviously, we prefer consistency as it impacts our operations, having to move around as one does. But that is very much in place. So to address your question here, what is the risk? The risk is counterparty risk. That is the fundamental risk in crypto arbitrage. So you need to know who's managing your money. Can they manage your money? Do they understand capital markets? Do they know what to do when events play out? Where do you hide? When do you decide to stop taking profits because it's just pure greed? And I think we're very good at that. And we have a dedicated risk division. We have our shareholders come from a depth of broad economic markets and large financial institutions. And the counterparties that we associate ourselves with are all pretty much well known in the media. And we have spent as much time as we possibly can pursuing the due diligence and maintaining that relationship at a CEO level and a CEO level, and remaining in constant contact with them as and when we think the markets look a bit dubious.
Andrew, it sounds like you're pretty uniquely positioned to actually exploit possible rising premiums for your clients. But it also sounds like a case of too good to be true. Why isn't everyone doing it?
Yeah, so I mean, back in 2017, 30% premium a day. Wow. Make this thing a bit retail, give a few news articles across various media channels back in 2019, 2020. Guys are still making 300 to 500,000 Rand a year, or 200,000 Rand. Yeah, it does sound too good to be true. We've been doing this for 7 years now. And we're not alone. There are one or two other guys who do this well, I might add. We have good competition. But the emphasis around the regulation, this should hopefully bring some layers of trust, notwithstanding our personal backgrounds, which we make fairly available online and to the media as a means of people who don't know us being able to do due diligence on the individuals in this firm and what we do. But the space has got very congested at one point in time. And as I described, as the premium got squashed down, people who didn't have experience in trading markets, who didn't have the asset management background, struggled to navigate these tougher conditions. It's very easy to make money when the premium's at 5%. It's a lot more harder to make money when the premium's at 1.5%. So we're asset managers by background. Most of our competitors are data scientists who've written some really good algorithms. We don't like the algorithms trading for us. We like the algorithms bringing us data, and we trade on that information actively across multiple trading streams, looking at the inefficiencies of Rand, dollar, and various crypto assets that we are familiar with.
And that, Andrew, I guess, highlighting some of the risks in doing, that arbitrage that one has to consider. Who is this suited to, and what's the minimum investment?
So minimum investment is at 100,000 Rand, and I would encourage anyone to use at least 200, 250,000 Rand. That is the sweet spot. The reason being is with 10 million Rand, we need to send over 100,000 Rand to perform your arbitrage trade. And that 100,000 Rand incurs 500 Rand for the SWIFT fees each time we send it abroad. That is a banking charge. So you're going to give up 50,000 Rand to the banks just in SWIFT fees. So let's play with 250,000 Rand if we are lucky. And we have clients who use upwards of 1 million Rand. Now, that's the minimum. That addresses the minimum. Anyone in South Africa who's over the age of 18 with an ID number, whose e-filing is up to date and is therefore compliant, can participate. And they would simply have to register with currencyhub.coza. It's all online. It's a 2-minute risk profile questionnaire. The FICA KYC thereafter is a 10-minute drag and drop. And then we set you up with a bank account. Whole thing can take literally 2 to 3 days, and we can be trading.
Yeah. And before I let you go, you touched on costs there. Are the SWIFT fees, obviously part of the cost? What's the full extent of the cost parameters and investors looking at here?
Yes, I mean, we essentially charge 25% of the gross, and that is charged through the foreign exchange component. So we are the foreign exchange intermediary. That makes us unique in being able to bring the Forex license and the FSCA Cat 2 license. And what that basically means, I buy your foreign exchange and I hedge it. And at the same time, I negotiate a premium. And it's simultaneously, knowing that information, I can then book your trade knowing what profits you've got lined up for the following day. So we'll only trade when we can see those profits. And as such, we have never incurred a financial loss. We haven't lost a single cent on any Forex payment or any premium payment since inception. So that's nearly 7 years.
Well, Andrew, let's leave it there. Thanks so much for having joined us on Smart Money today.
Thank you, Alishia. I really enjoyed it.